Anybody's opinion of you, whether it be high or low, has no direct bearing on your performance as a trader unless you allow it. Don't romance these little relationships that are laid in front of you where people can worship you or troll you. Don't even give it any energy. Don't give it any energy, because if you spend time in the market and you're looking for your setups, are you thinking about Carl before you put your trade on? Are you thinking about that person that you just can't wait to rub their fucking nose in it? You can't wait till this ends so that way you can say, hey, remember when you told me this, and this? Chances are, if you're taking that trade and you're thinking like that, you're not following your model. You're trading impulsively, like a retail trader would. You're doing something external to the model. You're looking for a reward, an emotional or psychological reward on the other side of that trade, which means that you're most likely not going to see what? When the market stops telling you it's going to continue what you're hoping it's going to deliver to. You won't recognize when you're finally offside because you're holding on to some kind of external proof that you want to give to somebody else. Instead of saying, this is my model. I'm waiting for it to be in low resistance liquidity run conditions. It's the right time of day. There's manipulation. I'm trading against that manipulation. I'm now trading against what retail would see, and it's the right time to do it. So everything's obvious. It's going to draw to this liquidity. I'm on side. And then when you get the trade on, you're just constantly monitoring everything being equal. You're not looking for some external thing to pony and showcase to somebody. You're following your model because you know following your model is going to yield you positive results. And you're not counting your money before you get it. You're not looking for any reason to run away from your trade because you're uncomfortable. You're submitting to it. Retail romances the uncertainty. They trade this larger position that they really can't afford to take as a losing trade if it's wrong. But they believe, what happens if I'm right? It's like winning the lottery. You are trained to not think that way. You're thinking, how can I manage the risk to such a degree that it's the smallest and I can hold on to the maximum terminus target and then let the compounding effect of pyramiding new positions while never really increasing the underlying risk. That is a professional mindset. We don't romance the uncertainty. We embrace the uncertainty. We don't have any control over the market once we enter our trades. But retail is going to hope and pray. They have hope and pray model. Hope and pray model is not a model that is consistent. Not in terms of profitability, but it is a model that's consistently delivering losing traders. Blown out, blown accounts, lost funded accounts, failed combines. Hope and pray model is not something you want to be doing. So we look at things from a time and price aspect where we can say, okay, this is what is reasonable. And we have tools in our repertoire that help us determine whether there's an edge, whether there is a bias, where the market should draw. When the market has created a jaggedness to it on the downside, sell side's been delivered and it's been done with multiple passes lower and they have smooth relative equal highs just above us. That's not complicated. We're not looking for harmonic patterns. We're not looking for continuation patterns. We're not following the trend is your friend horseshit. We're looking for where are the orders that's going to be consumed next. We've already disrupted the market to the downside. We've done that with a lower gap opening. So we have a discount opening gap. We're still inside the first 30 minutes. And there's relative equal highs that are still above half of the opening range gap. So that means we have something we can trade long because the gap is indicating that first 30 minutes bias is bullish. And when it trades the half the gap, then we have to see, does it want to go higher? If it wants to go higher, then we can trust it's going to go where? To the relative equal highs, because it's already done the damage by making things jagged to the downside, and it's going to want to reach for opposing liquidity. That's not a complicated thing. That's not religion. That's simply looking at, okay, yeah, the market's done enough to try to entice people going lower. Every little short-term low has been taken, and that means that they have engineered sell-side liquidity so that way they can buy it at a cheap price. They're not going to buy it at a cheap price and not wait till it goes higher to sell it at a high price. And that's what smart money does. It engineers liquidity. They buy that liquidity if it's below old lows, and they hold it until it goes above old highs. That's it, folks. That's all it is. That's all this is. It's the game of hot potato. Remember as a kid? Is these little games you used to play? Red light, green light, mother may I, all these types of things. Well, it's like, here's the hot potato. You hold it, and then you got to pass it to somebody else. That's what's going on all day long. And that's why I called that little drill, that exercise, volatility pinball, because you're constantly banging around, taking the buy stops, taking the sell stops, buying here, buying there, selling here, selling there, looking for inefficiencies, the fair value gap, use as your entry mechanism, find a reasonable stop loss, and where's the next draw to go to. And it trains your eye to see it that way. And then when you start trading with a 5-minute chart like that, and then you start trading a 15-minute chart like that, then you start trading a 1-hour chart like that, then a daily chart, and then you look at the market like that through the lens of a weekly and monthly chart, you have an ability to look at time over any given time frame and use the same logic. And then if you can start doing that with a weekly chart, you can see where the market's likely to go to for weeks, not just right now, present week, or the week that you're trading in, or the week to come. Like right now, we don't have the market open Saturday. So applying what you're doing and practicing with that volatility pinball drill, desensitizing yourself to entries, if you start looking for that same idea on a weekly chart, you can see, oh, the market's most likely going to draw down to this old low here. Does that mean it's going to happen in 1 week? No. It just gives you a long-term or intermediate-term draw on liquidity. So that way, you might be a buyer or seller throughout the week, but you can anticipate that your larger short positions with the most leverage will be placed on shorts, aiming for that weekly draw on liquidity that may be beyond the scope of this present week's delivery. It might only go down a couple hundred handles this week, but you're looking for it to trade down 1,200 handles. So it keeps you in check and telling you, don't try to look for the long. It calls the bottom. Focus primarily on looking for environments where the 15-minute, the hourly chart runs above relative equal highs or an old high, and you're going to anticipate that, setting the next leg for a price low or delivering to that weekly draw that is going to be way beyond what you think is going to happen just in 1 week. So that's embracing the uncertainty. These are things that are likely to occur, but you're not lying to yourself and saying it can only happen in my hands favorably and not unfavorably. Retail likes to lie to themselves, and they attribute all their success to things that are outside or external to why price is going to go up and down. And that's why they get emotional. That's why they show outbursts on social media, either in tweets and YouTube videos and live streams if they're doing it live. They get real emotional. They get real volatile, or they get real quiet and are angry, or you can hear their breathing, or they'll quickly have to dismiss themselves. Okay, I think I need to take a break now, and they're done. That's not somebody that's in control of themselves. That's not somebody that has a model that they have seen and trust and they believe in. They have something that they're just using as an excuse to get in.